Tech margins are under absolute siege right now. In this explainer, we're unpacking the pressures squeezing big tech. Microsoft just dropped a bombshell. The cost of component memory has spiked by more than 2.5 times. Apple's already passing these costs on to us, forcing price hikes on Macs and iPads just to protect their bottom line. Worse still, Microsoft warns costs will double again by 2027, potentially forcing massive $150 hikes on Xbox consoles. Here's the macro thesis. If the world's biggest companies are feeling this pain, the broader market is definitely next. Let's break down gross margin. It's the ultimate leading indicator of a company's true operating leverage and health. Look at the math. $1 billion in revenue with a $400 million gross profit equals a 40% margin. Put simply, for 40 cents of every dollar is kept to fund actual business operations before other expenses hit. Historically, these massive margins gave tech giants incredible pricing power and the leverage needed to fuel future growth. But when component inflation rises faster than a company can raise prices, those pristine margins literally vanish. The domino effect is brutal. Top-line pressure eventually forces severe marketing cuts, job losses, and even facility closures. This is a huge market risk. Today's sky-high stock valuations completely rely on these strong earnings estimates holding up. It's a tightrope walk. Hiking prices to save margins risks totally destroying consumer demand and tanking sales volumes. If demand weakens and gross margins crack, Wall Street's optimistic earnings estimates are going to collapse fast. Companies will desperately try hiding this inflation using share buybacks, productivity tweaks, and incredibly strict expense discipline. This makes the Q2 earnings season a massive strategic test. How will companies actually handle this structural inflation? Your practical investor takeaway? Look past immediate earnings. Focus entirely on forward guidance, because those top-line pressures eventually bite. So, will Q2 guidance finally shatter the market's gross margin illusion? It's the one critical metric you must watch.